Opendoor stock has just wrapped up one of its strongest weeks in memory, closing Friday at $6.65 per share. That's an increase of almost 70 cents on the day, more than 11%, and when you zoom out to the full week, it's been nothing short of incredible. We're talking about a 5-day winning streak that's lifted the stock by nearly 50% in value. It's the kind of move that gets people's attention, and make no mistake, people are paying attention now. What makes this rally even more impressive is that it happened in the face of a pretty subdued broader market. The indices weren't running hot. In fact, there was hesitation, waiting on signals about the economy, inflation, and interest rates. Yet Opendoor surged anyway. And the reason is clear: this is a retail-powered movement. The Open Army, as it's now being called, has shown up in force and proven that when retail aligns behind a vision, the results can be dramatic. Now, before I dive into the heart of today's video, I need to set expectations clearly. As bullish as I am on this story, no stock goes straight up forever. After 5 consecutive green sessions and nearly 50% gains in 1 week, it's natural, almost inevitable, that some profit-taking is going to occur. Traders who came in for the quick ride are going to want to lock in those gains. And that's fine. That's healthy. If I had to guess, Monday morning may still open strong, because enthusiasm is high and momentum has a way of carrying through. But later in Monday's session, or perhaps Tuesday, we could see some of that profit-taking pressure. And here's the thing, that's not a reason to panic. In fact, it's part of what makes a rally sustainable. If the stock can consolidate around these levels, maybe hold $6 as a new base of support, or even bounce around the $5.50 to $6 range for a while, that sets the stage for the next leg higher. Volatility is part of this journey. Dips are part of the journey. What matters is the bigger picture, and that picture, right now, is incredibly bullish. So let's talk about the driving force behind that bullishness. A huge part of this story is Eric Jackson. Love him or roll your eyes at his antics, you can't deny that he's become a lightning rod for this movement. Think about what he's done over the past few weeks. He literally camped outside Drake's mansion for nearly 2 weeks, holding up signs and turning the story into a meme-worthy campaign that spread like wildfire. Then he flew to San Francisco, then to New York, meeting with members of the Opendoor board and even sitting down with Keith Rabois, one of the company's original founders. Eric's influence isn't just about stunts. It's about visibility. He's become the loudspeaker for retail's vision of where Opendoor can go. He's the one calling out the board for being too risk-averse. He's the one putting the $82 price target out there and making sure it stays in the conversation. And importantly, he's the one amplifying the community's voice so that management can't ignore it. But here's where things get tricky. Over the past couple of days, Eric has started hinting at another 100 times opportunity that he wants to talk about soon. Now, in one sense, that's what investors like him do. They're always looking for the next big play. But in another sense, it risks diluting the energy that's been building around Opendoor. And that's something we need to talk about, because right now, retail momentum is the strongest asset this stock has. Think about it this way: when Eric went to New York and met with Keith Rabois, the market noticed. When he said the board was the biggest hurdle holding back Opendoor from becoming a $50 stock immediately, people listened. When he campaigned outside Drake's house, it wasn't just entertainment. It was a signal that retail investors were willing to go to extreme lengths to get attention on this stock. Those actions moved sentiment. They moved the market. And now that he's hinting at shifting focus, even just a little, there's a real risk that it distracts from the mission. And the mission is clear: reform the board, get the CEO search right, and push Opendoor to embrace a bolder, more innovative strategy. That's what the Open Army wants. That's what retail has been pushing for. And frankly, that's what's needed if this company is going to unlock the kind of value that takes the stock from single digits to double digits and beyond. Now, let's be clear, Eric has every right to talk about other opportunities. That's his prerogative as an investor. But for those of us who are heavily invested in Opendoor, it's important to say that his focus matters. His actions matter. The retail community is looking to him as a leader, whether he intended it or not. And when a leader shifts focus, it shifts the energy of the movement. So while he may see another exciting play, a lot of us would rather see him stay locked in on Opendoor until this story reaches the next chapter. Because here's the thing, the bullish thesis for Opendoor is stronger than it's ever been. Let's look at the catalysts in play right now. First, the CEO search. We know the board is close to making a decision. It could be days away, maybe weeks, but not months. The right CEO pick would be a massive catalyst, sending a clear signal that the company is ready to embrace the vision retail has been pushing for: an asset-light, AI-driven, seller-focused marketplace that could truly transform the real estate industry. The wrong pick would be disappointing, but the pressure retail is putting on the board makes me cautiously optimistic they'll get it right. Second, board reform. This is the big one. Keith Rabois has been clear: the board is too cautious, too risk-averse, too stuck in old ways of thinking. If reform happens, if we see new voices added, or existing members pushed to act with more urgency, that could change everything. It's no secret that governance reform is one of the hardest things to achieve in a public company. But here's where retail is unique. The Open Army isn't just pushing stock price. They're pushing strategy. They're pushing leadership. And they're doing it loudly enough that it can't be ignored. Third, interim CEO Shrisha Radhakrishna has stepped up in ways that shouldn't be overlooked. Since taking the role, he's leaned into transparency, launched the Opendoor Community Hub to provide regular updates, and engaged directly with retail in ways that most executives wouldn't even consider. He's balancing corporate responsibilities with retail energy, and is showing that it's possible to do both. That builds confidence. That shows alignment. And it sets a tone that the next CEO will have to respect. And finally, let's not forget the macro backdrop. Rate cuts are increasingly expected from the Federal Reserve in September. For a company like Opendoor, which thrives on housing market activity and transaction volume, lower rates are like rocket fuel. More buyers enter the market. More sellers list their homes. More transactions flow through Opendoor's platform. Combine that with a leaner, more innovative operating model, and you've got the recipe for significant operational improvement. So when you add all that up, the CEO search, board reform, Shrisha's engagement, and the macro tailwinds, you see why so many of us remain bullish. You see why Eric Jackson's focus matters so much. Because this isn't just another stock. It's not just another trade. It's a movement. And movements require leadership, consistency, and conviction. Now, I want to circle back to the idea of profit-taking, because I think it's important to frame this properly. If you're new to the stock, or new to trading in general, you might see a dip next week and panic. You might think the rally is over. But here's the truth: rallies are built on waves. They surge, they consolidate, they surge again. The goal isn't to avoid volatility, it's to embrace it, understand it, and stay focused on the long-term vision. If Opendoor dips back to 6, or even 550, that's not the end of the world. It's a chance to build a stronger foundation for the next move higher. The key is not to lose sight of the bigger picture. The Open Army has shown incredible conviction this past week. They absorbed insider selling. They shrugged off broader market weakness. They rallied the stock 50% in 5 days. That doesn't happen without real belief. And as long as that belief stays intact, the dips will be opportunities, not disasters. So as we head into the new week, here's the message I want to leave you with. Celebrate the rally. Acknowledge the possibility of some short-term profit-taking. But stay focused on the catalysts that really matter. Stay focused on the CEO search. Stay focused on board reform. Stay focused on the company's pivot to an asset-light, AI-driven model. And yes, stay focused on the role retail is playing in shaping this story. And for Eric Jackson, if he's watching, I'd say this: your actions matter. Your focus matters. You've become the voice of a movement, and while we know you'll always be looking for the next big play, we'd love to see you keep that focus on Opendoor until this story reaches its next big milestone. Because if retail and leadership align, this isn't just a $10 stock or a $20 stock. This is something much bigger. The ride to 82 won't be easy. It won't be straight. There will be bumps. There will be dips. But with conviction, patience, and focus, the Open Army can get there. And that's why I remain bullish heading into next week, no matter what short-term volatility we face.